Hello, the reason for this video is recently I had a few clients cancel because once they received their disclosures, they saw a servicing company, one of about 20 that we use, and they didn't like some of the reviews that came back. Okay, so basically what I want to explain to you is a few things on how all the mortgage things work. So basically, here's you, the homeowner. Okay, what I do is set you up. Basically, our job is, and what you should focus in on, is getting money, which is a commodity, as cheap as you possibly can. The cheapest rate you can, along with the cheapest fees. Because you keep seeing all these banks paying billions and billions of dollars in penalties, but still producing a profit. How? Well, because they're charging you fees, and a lot of people think, well, if I go to XYZ Bank, they're a big national or federal chartered bank, they're awesome. You know, I'll deal with them. We'll do a lot of reviews on a lot of the big banks, and you might change your tune in that area a little bit. But let me just explain the flow through of loans. So here's you, the homeowner. I help you get a mortgage. And we use this company, and basically, or most of the companies we use, all they are mortgage companies. They don't do car loans, savings account, checking accounts, and all that. They just specialize in mortgages. So we get our money from them. Okay, that's kind of where you end to a point. What they do then, in essence, they'll in a lot of cases they'll sell off your servicing. But one other step that most people don't know is, in most cases, probably 90% of the cases or higher, the money is theoretically coming from Fannie Mae or Freddie Mac. And I'll explain that in a separate video. So basically, here's the link through of how you're getting your money. Now, when I receive these phone calls, I'm being told, well, this company, I'm getting it there, I'm more comfortable with having a loan there. Well, be careful, because when you close on your loan, in your paperwork, you're going to sign a contract. That contract is in essence the loan. It's giving you the terms of your loan. The rate, the amount of money you're paying, the term, meaning the years, if you're escrowing, and other things. But almost all loans can be sold. So it will be sold in the percentage of loans it sells. So when you close on your loan, check that. So basically what I'm trying to say is, don't be wowed over the name, because your loan might transfer. I've talked to people that have their loans for 4 or 5 years and it's already transferred 5 or 6 times. So if you end up going with a company or a lender or a bank that you're more comfortable with, but the rate's higher and you're paying additional fees, you might theoretically, at the closing table, and this happens, sign your papers, and the servicing rights are actually being transferred that day. So just be careful. Again, you're getting money, which is a commodity. It's nothing unique. So what what I would say is, don't go to a high finance company or things like that. You have to be with a prudent company. But a lot of times too is check when you're dealing with the people or a person or a bank. Ask for their licensing, their charters, all this other stuff. Check on them, the person you're actually dealing with for that transaction, not in essence where the money is coming from. You got to trust that person. So hopefully this clears up some things. If not, please give me a call. I'd like to give you additional information. 630-338-1160, or visit us on the web at 1160mortgage.com. If you would, please subscribe to my YouTube channel. Help me get more of education out to homeowners and potential homeowners to kind of save them a lot of grief and hassle, and maybe even a lot of money. Thanks. Take care.